morning, and thank you for tuning into Your Come Up. Today, we're going to have a conversation here with Diane Sackett about insurance and marketing. Today's episode is sponsored by Yapix Web Design and Graphics. Good morning, Diane. How you doing today?
Good morning. I'm doing fine, thank you. Thank you for having me.
Oh, thank you for joining. Thank you. Before we get into the topic at hand, I just want to ask if you could tell us a little bit about yourself.
I started with marketing and advertising back when I was very young. It was one of my very first jobs. Got into the insurance business later on. I ended up getting licensed because licensing is very important. And that's the very first thing you need to make sure that you are working with somebody who is licensed in the state that you're in. There's a lot of people out there doing what I call consulting and getting you to buy policies, and they don't run them through the proper channels.
Okay.
But that's a subject for a whole nother time. But the insurance is something that I have worked in many different fields within the business, life insurance being one of them, health insurance, Medicare, long-term care, annuities. Mm-hmm. I've worked with very high-end individuals structuring business buyout using insurance. If you buy a non-term policy, you can use insurance as part of your retirement program. Life insurance has, when you buy a non-term policy, has guaranteed values on what the insurance company has to pay on the principal. If you have a $100,000 adjustable life, whole life, whatever policy it is, but it's a fixed policy, not a term policy. You can actually pay maximum values. The money will accumulate, and the insurance company actually pays you a higher rate of return than is currently being offered at your bank or money markets right now. So when you're looking at your portfolio at whatever stage of life you're in, oftentimes you end up with a combination of both what I'm going to call term rented insurance, because it has a start date and an end date. Other policies that you may buy have a start date but do not end until you're 100. All policies endow on the day you turn 100, and there's more and more people turning 100. It just depends on what your goals are, how much you want to dedicate to certain parts of your financial portfolio. A young person just starting out with not a lot of assets, or maybe with a lot of obligations but not a lot of assets, that's when you want to look at something that's more like a term policy. And you can buy those in increments from 5 years to 30 years. And depending on what you earmark it for in your financial portfolio, you have the ability to sometimes within those policies fix portions of them. So, i.e., Nathan, you have a $100,000 policy. Mm-hmm. And right now that's a term policy, but a provision in your term policy may be that every 2 years you're allowed to fix a portion of that. And what that means is you get to make that a permanent policy that becomes something that you can use as a financial tool to save money or to just have permanent insurance. For myself, I have right now a very high term policy for a very short window, so that if something were to happen to me, my grandson, who we are guardians of, would have funds to get him through till he was 18. However, I have also fixed a portion of that because I have 2 other grandchildren, and everybody will get the same amount, and I don't have to worry about the day and the date of when I leave. But I know there's extra money right now, and there'll be money for everybody later. So those are the type of things that you can do. It can be very flexible. One of the things that I always encourage clients to do is to actually sit down with somebody who isn't just selling you insurance. Somebody who's really going to look at your overall portfolio and understand where you're at. If you are fresh out of college, but you might have that $50,000 to $200,000 student loan. That doesn't go away when you die. Your bills and your obligations are your bills and your obligations when you live and when you pass away. Depending on how you have structured your mortgage, your rent, any of those things, they most all have beginning and end dates. Safety is the base of where you should start as you're building your portfolio. Once you have your money saved for your couple months ahead, you need to always make sure you have that safety. And the safety block at the bottom of your pyramid that you build for your financial portfolio is where you have your life insurance. And that's where you make the determination between the term and the permanent, or a combination of both. If you're a professional, I'm saying professional as in doctor, lawyer, where your education is actually the vocation that you are doing. There are so many things that can happen that will potentially permanently or temporarily make you disabled. So you may want to look at disability insurance. But you match and you marry that all around the base of your life insurance. As we age, as things happen to us, our ability to buy either term or a permanent policy changes. Underwriting rules that apply to term insurance on a 10-year policy are not the same underwriting guidelines if you are 35 and looking to buy a whole life permanent insurance. So if you are a young person, maybe you've just had your first child or you're buying your first house, all of a sudden your exposure in the financial world has gotten very high. Average house, let's say in California, 350 to 500,000. You might have a 2-income lifestyle. If one of you is not there the next day, neither is the money in most cases. So this is where life insurance, which also, by the way, comes to your beneficiary, a one-time non-taxable event. But what you want to make sure is that you have enough that you're comfortable having your family, and again, this could be either spouse, because in a two-wage earner home, you're both dependent on those dollars, will be able to make their house payment or car payment or whatever to give them that time to reorganize. That's some of the bases you want to look at when you're thinking, how much life insurance do I need? So there's a lot of moving pieces inside of life insurance. It's not just, hey, do you want this $500,000 policy for $11 a month, as you see advertised on TV? There's really should be a reason and a rationale as to the amount that you pick, the amount that is necessary. I've actually had people downgrade their insurance because they were overinsured. People who have $15,000, $25,000, $30,000 worth of liabilities do not need $500,000 of life insurance just because it was $11 a month. You want to do it on a needs basis, and you want to make sure that you review what you're doing, ideally annually, but I always went with annually 2 to 5 years if circumstances haven't changed a lot. Those are kind of the bases of how you decide between the two. The term has a start date and a sunset date. If you do a combo policy, you can have a little bit of both. Life insurance is about risk management. And how much are you willing to risk against how much do you want to transfer that risk to somebody else? So if you cannot afford one day without, or 1 month go by for your family to be without your paycheck, you have a very immediate risk, but you may have a very small window that you need to cover that for. Example, your 2-income family, you want to make sure that your other half can make the mortgage payment, but you can't afford, or you don't choose to afford, a $500,000 policy, or maybe you don't qualify for that. Mm-hmm. You could maybe buy a $100,000 policy, which would then allow the other person to have a pot of money to continue at least making the payments. So it's not always an all or nothing. You don't have to always cover the entire cost of the mortgage. you can cover a year or two of making those payments. And that gives the other person some time, some breathing room, because maybe they don't want to stay in the big house. Maybe they want to move closer to somebody that can help them or whatever it is. Everybody's got their own story. Most important thing, in my opinion, is make sure you're telling your story and somebody is listening that can actually guide you, because there's going to be different needs at different times of your life.
Diane, thank you again for coming on today. And thank you guys for watching. And today's episode is sponsored by Yapix Web Design and Graphics. Until next time.